Okay. Hello, everyone. Welcome to the HodlCast. I'm here with special guest Anessa Santos, and today is February 19th, 2019. Anessa, thank you so much for coming on, and maybe you could give us a little background of yourself.
Hey, thanks for having me, Sasha. I'm so grateful to be a part of your podcast. And I am an attorney in Orlando, Florida, and I have a law firm called Untitled, and I specialize in representing emerging technology companies from idea to exit and everything in between.
Excellent. Well, I know you've been working in the cryptocurrency space. How did that catch your attention? How did you get involved with that?
Well, it's a really interesting story. I spent most of my career as in-house general counsel to these companies that specialized in video conferencing equipment and global network infrastructure for video network operations and managed network services. And when I came out of that, because these companies were always sold, right? There was always the big exit strategy in mind because that's the goal. And I was frequently without a job, right? So I was like, okay, so my idea of job stability is going to be to have my own law practice. And I thought, oh, now it's time for me to get to know my colleagues and spend some time with my colleagues. So I joined the Law and Technology Committee of the Florida Bar Association. And it was our colleagues at the Florida Bar who pointed at me and said, hey, you sound like you know a little bit about like networking and stuff like that. How about you educate the Florida Bar on blockchain and smart contracts and digital currencies at the annual Florida Bar Conference? And I said, sure, no problem. How hard can it be? Yeah, that was like hundreds of hours ago of like serious hardcore study. Because Sasha, you are an industry expert in this field and you really get into the weeds of the technology like I do. But this is not for the faint of heart to take this leap into the subject matter.
Yeah, it's certainly not something that you can just read a couple books about or like learn about in law school and then you have a general knowledge of like something. It's quite
right. No, it's so area. True. It's a lot of work. It's very difficult. It's emerging. It's constantly changing, and it's like a toddler, man. Everybody's screaming about it, and it requires constant attention.
That's a good definition. Well, so you spoke at Block Spaces back in December it was, and I really enjoyed your kind of intro slides in the presentation, and it was heavily focused on venture capital funding. And I think, after the whole ICO boom, it's kind of reverted back to venture capital being, the backbone of, being where new companies are looking to raise money from. And I think that was an area that you seem to have a lot of insight into on how to work with a venture capitalist. So that was kind of what I was hoping we could focus today's episode on.
Sure.
So maybe you can just tell us, what does someone need to do to, open the door with a venture capitalist? Like, how do you start that relationship?
Well, I always recommend taking the leap with the opportunity to work with a FINRA registered broker-dealer. And the reason for this is because broker-dealers are absolute fiduciaries in the transaction. And so for folks who might not know what a fiduciary means, it's somebody who has special obligations, right, and special responsibilities under the law, and that they've been trained and they actually have a license that they have to behave or they lose their license to their livelihood. And they have to meet all of these little steps. And so a FINRA registered broker-dealer is somebody who really understands what is required in the way of making certain disclosures about the company that's being invested in, and how to make those disclosures to these prospective investors, and how to pay for the deal responsibly. And this is very important, right? Because the kind of disclosures, and we can talk more about that if you think that would be appropriate, but the kind and the way in which disclosures are made really serves as the insurance policy for the company. It's the insurance policy because if things go wrong down the road, and they are wanting to do that in startups, especially in emerging tech companies that are really unstable, like all blockchain is just at the moment, if you lose the investor's money, then a lot of times the investor is going to say, how can I get my money back? And the first thing they're going to do is they're going to take a look at that transaction, everything that happened in the transaction, to see if they can poke a hole so that they can have a cause of action to come in and get their money back. So I often caution people against working with folks that say, well, I might not be a registered broker-dealer with FINRA, but, I know this guy, or I know this woman, or this company, and I really think I can set you up, and I'll just take a little bit of, money from the commissions, right? If the deal's successful, I'll take a little bit of money from the commissions. That is absolutely prohibited, cannot be done, completely illegal. The answer is no. You cannot compensate someone from the success of the deal. The compensation cannot be tied to the success of the deal if they are not a FINRA registered broker-dealer. So when starting that relationship to do some fundraising, of course, I say take a look at your funds that are local, like Fundopolis is starting up here in Orlando. We have Florida Funders, which is, sort of like there was a bit of a merger or relationship with, Florida Angel Nexus, and, take a look there, see what's going on in your community, show up at the events, get to talk to folks, and don't poo-poo on this idea of working with a FINRA registered broker-dealer, because they can really protect you if things go wrong down the road.
Mm-hmm. Absolutely. Yeah. And so what would be, if someone was going to a broker dealer, mm-hmm. So I guess one of the first things they need is a business plan. What
do folks need to have an order?
Yeah.
Like, what do they got to have? Absolutely. That's a really important question. So I get a lot of folks that say, well, I have this nifty pitch deck, and we're a startup, so we don't have a history of financials and whatnot. And that's just not good enough. I'm sorry. It's really not. The pitch deck is the condensed version of the full-blown business plan. If you have not made a full-blown business plan, if you haven't gone through the horrendous, painful experience, like pulling wisdom teeth to figure out what really your plan is, then your pitch deck is no good, because you haven't done the work to go and pull the assumptions from the marketplace. So I want a full developed business plan, and it shouldn't be 12 pages. That's a pitch deck, right?
How long do you think the business plan should be?
The business plan should be probably anywhere from 35 to 50 pages. And I'm expecting it to have graphical representations. And it also, you need to do the market analysis. I hear from folks all the time that say, we're the latest and greatest thing. Nothing like this exists out there on planet Earth. We're new. We have no competition. And so, I get it. You're excited. You're enthusiastic. I understand. But save your sales pitch, right, for your customers. You're not giving a sales pitch to your investors, and there's reasons for this. So when you do your market analysis, I want to know what is your total addressable market, your service obtainable market, your service addressable market, and I want your launch addressable market, please. I want to know what your direct competition is and what your indirect competition is. I know you think that you have no competition, but somebody else is going to think that you have competition, and that's what you're required to disclose. What is your competition in the eyes of the prospective investor, not the competition in the eyes of the leading directors and officers? I want to see that you've got a really strong advisory board or a board of directors, people that are going to be able to provide you support. You had better have your financials on lockdown. And when I talk about your financials, I want 3 to 5 year projections. And people say to me, well, I don't have a history, so how I can project? And I say, you make it up. You literally make it up, right? But you make it up based upon assumptions. So you can say, I intend to sell 10 widgets each month in year 1, and I'm going to double that in year 2 and double it in year 3, right? So now I'm selling 40 widgets. And I'm going to do this because I've researched the market. I understand what my market entry is. And by the way, when I plan this out, it's going to require additional resources. And so I'm going to need this much money to meet my operating needs growing into the future. And by the way, I project that I'm going to be in the black come this date certain. And so then that's how you actually sort of plan out what your ask is going to be. Don't ask for too little. If you're asking for too little, that's going to make me nervous as a prospective investor, because anybody who knows anything knows that problems happen down the road. And so the worst case scenario is that we have an undercapitalized company with upset investors. So make sure that you budget in a 20% margin of error for your ask. And so those are the primary documents. I want your governing documents, your operating documents. I want your bylaws, your shareholders agreement, or your operating agreement if you're a limited liability company. And by the way, you can't do this successfully and be taxed as a small business under an S election with the IRS, because the IRS does not permit you to issue more than one series of stock or membership units. An LLC is an S corporation. You can't do it because the IRS said so. So if you're looking to offer a Series A preferred or a Common B, or these different rights and preferences to prospective investors, you need to be prepared, and you need to convert yourself either as a C corporation, or if you're an LLC, to be taxed as a partnership.
Mm-hmm. And on that topic, do you find do venture capitalists prefer the LLC structure or the corporation structure? Does it matter?
So my experience is that I have no pushback whatsoever on an LLC taxed as a partnership or a corporation taxed as a C. Okay. Where we get into trouble is if we have an LLC taxed as a C. We can't do that. It's the wildebeest of corporate entities, and there's a whole bunch of reasons, and it has to do with the IRS. So if folks out there are watching and they're rolling their eyes, yes, it's all the IRS's fault. There's a lack of clear guidance on being able to offer employee stock option plans in a limited liability company taxed as a C. And that's where sort of the convoluted issues come from. So typically we try to stick with vehicles that investors are familiar with, they're comfortable with. They don't want to have to go out, and be the corporate securities attorney or the CPA for your company. So just give them a vehicle that's a comfortable drive.
Okay. Yeah, that makes a lot of sense. And then, so I've had clients go through this business plan process and outsource it. Mm-hmm. Do you have any thoughts on that? Like, to me, I hope those clients aren't listening and thinking, oh, she's talking badly. But I think it's an important exercise to go through yourself rather than outsource it, because there's so many nuances that come back, and you get this beautiful business plan, but if the person driving the company doesn't understand what's in it, then it's not as powerful of a tool as it could be.
Yeah, no, I completely agree, right? So there's a couple of really important issues that you've raised and folks really need to be aware of. And if your business plan is internal and you've outsourced it because you're looking for some sort of industry expert to come along and help provide you guidance, fine. But the issue is that when you draft a private placement memorandum, right, or even a long form subscription, for your prospective investors, one or the other, and you're attaching your business plan as an exhibit, then what you have done is you have incorporated everything in that business plan to your disclosure materials, and then it becomes a disclosure. So when you it has to do with how you write your business plan, right? So if you're writing your business plan and you're like, yeah, we're the greatest and we have no competition, right? It's your marketing and sales business plan where, you're going to talk yourself up to prospective customers. You can't be saying those things in your disclosures because now you have to live up to them. You really do have to be objectively the greatest thing on earth with no competition and so on and so forth. Because if you don't live up to it, then you've committed fraud, right? And now all of a sudden there's the holes that have been poked into your deal, and that gives the investors an opportunity to come back and get a court order for you to just forge the funds or pay them back out of your personal wallet, right? Because everybody thinks that they're protected by the corporate veil, and they are. There is limited liability with a corporation or a limited liability company, right? Except for fraud and certain other instances when you're behaving badly with a company. So it's really important that you be very careful about the disclosures that you're making, the documents that you're handing over, the tone, the adjectives are a big wonking deal, and I go through with a fine-tooth comb. And so these are some of the things that folks need to be concerned about. If they're outsourcing it and then they're attaching it, then they are committing themselves to it. So they had better know it themselves as if they wrote it.
Mm-hmm. Mm-hmm. And is there some certain key factors, like when you're working with a company that beyond just the business plan, that that you see, like, I guess maybe character traits or just ways that that company is operating that give you kind of a light bulb, like, oh, these people are going to be successful, or,
I had one show up in my office today. Yeah, I was like, oh man, because I'm not their primary lawyer, but I wish I were, right? Because they're really going to hit it. And so I can definitely see some key factors. When they've done the work themselves and it's complete, it might not be like, I'm sure there's always amendments and improvements, and you could write more paragraphs. And Sasha, you and I are lawyers, so it's harder for us to say a little than it is for us to say a lot.
Mm-hmm.
But when somebody has identified a real world problem that needs solving, they have fashioned like the direct solution to the problem. And they're like, hey, we've got this great thing. And oh, by the way, we patented it, right? It's patentable. So now we have market protection. And then, you see their pitch deck and you see their graphics. And, I went through all the materials today, and I literally said to them, I said, oh my gosh, you guys are young. They're like young millennials. They're like, yeah, they're like baby millennials. They're like on the cusp of Gen Z kind of folks, right? I was like, you're young, you're inexperienced, and holy crap, you're going to be like really rich because somebody's going to come along in the industry, because there's like big mega mammoth people in this industry. I said, you're headed towards your exit. Get ready. It's going to come in less than 5 years. Don't blow it all on chicks and sandy beaches. They have their act together, and it really shows.
Mm-hmm. Yeah, it's, I agree. Like certain people, they know how to cut right to the important information in their business plans or whatever, documents it is. And there's no fluff, and they respond quickly whenever you ask anything of them. It's such a treat to work with people when they're on their game like that.
Oh my gosh, it was so refreshing. And and another thing I noticed about them too is that they engaged counsel early on. Now, I know their primary counsel, he just doesn't do securities. And he's a really nice guy, right? And I like him a lot. And it's just like I like you, right? So I was like, oh, the work is coming along. It's good stuff, right? I mean, it's going really well. But I've noticed that folks that engage qualified licensed advisors early on in the process, and time to money just goes like this. By contrast, if people don't know what that means, it means it shrank. Time to money shrank, right? By way of contrast, I have other clients where it is like pulling teeth. It's awful. It's a dental visit to try and get them to focus, to define exactly what the purpose or the mission of their business is. And they just kind of want to reverse the rotation of the earth, right? And solve every problem on the planet. And they want to hit major industry verticals, and that's another thing, right? You cannot be medtech, edtech, fintech in one company. You cannot do that, right? Just to kind of give you an example, because what the Security and Exchange Commission requires is that you have 3 separate financials and 3 separate marketing and sales plans and competitive landscape analysis. And so basically, you just might as well set yourself up 3 companies, which I suggested anyway, right? Because they're going to have to manage their liabilities. And so I think that when you have a laser-like approach to attacking a well-defined business problem and doing it successfully, and then phasing out additional modules of products, services, solutions that you might be able to sort of build onto it, kind of like a Venn diagram, right? Then you're going to have a much better chance of being successful. But these guys, they're young. They've got their act together. They've done everything right. They're going to be bought out in 5 years. And when the offer comes, I don't know if I'll be their lawyer then or not, if I'll be on the deal, but I would recommend that they negotiate well and that they sell, right? Mm-hmm. Because there are ways to work around patents. And not every business model is ripe for a patent application. This particular one is, because they've devised a mechanical solution. It's an actual mechanical device, so anybody can crack it open and see how it works. So it's got to be patented.
Oh, excellent. And what has your experience with patents around the blockchain technology space been? Or have you seen, are the venture capitalists you're in touch with, are they requesting that companies have that, or are they more embracing of the open source aspect of this stuff?
It's really interesting. A lot of venture capitalists that I know who are really hot into the whole blockchain space, and for folks that are listening, blockchain includes digital currencies, smart contracts, and the whole thing, right? Blockchain is the foundation. And they were all hot to trot on everything blockchain, and now they don't want anything to do with blockchain, And so what I say to them, and I say it nicer, of course, is that what this tells me is that you don't actually understand the technology, because blockchain is here to stay. And it's like the fifth or industrial revolution. It's crazy how blockchain is going to change and infiltrate every single aspect of our lives. And it's just really important to dig in deep into the weeds of the company into which you are thinking of investing, and really understand what is the application of blockchain. Is it necessary? Is it a marketing gimmick? I actually had somebody ask me recently about the inclusion of a token for the prospective investors, like wrapping their investment in a digital wrapper, right? Tokenizing their securities. And I said, well, it's not technically necessary in a privately held corporation, right? I don't really see why that would be recommended in a privately held corporation. I said, but it could be an interesting marketing gimmick. And as long as that's wholly disclosed to prospective investors, then I'm on board.
Mm-hmm. Mm-hmm. Yeah, so the whole security token market is like, it has the potential to create a lot of efficiencies around, the clearing and whatnot of the traditional stock market. But I think it's one of these things where we've got a long way to go until it's practically, makes sense to use a security token as opposed to just issuing equity to investors.
Yeah, because of the cost involved. It's pretty expensive to do a security token offering in a small, company that's maybe just doing a Reg D offering. It might make more sense with a Reg A plus offering.
Yeah, well, I think once those get going, once you start seeing some of those get approved, that could certainly be, because then it's not limited to the accredited investors, and the company's gone through all the disclosures and actually gotten the SEC to look at it, review it, and, give a stamp of approval before the investing public can touch it. So
I agree. And I recently read oh my gosh, I can't think of her name, the new SEC commissioner.
Hester Pierce.
Thank you. Yes. I read her statement that she came out with just recently. It was like on February 8th. Did you read that too?
Oh, yeah.
Oh my gosh,
about being stuck in the ATM machine.
Yeah.
That was funny.
Oh my gosh, I didn't even hear that story where the guy got stuck in the ATM machine with little help papers out of the ATM. That was amazing. But the part that I loved it, and it was tough, and I'm concerned that folks might get bored reading her speech, but when you get halfway down the speech and then like the bottom third, really, she gets into the weeds about the foundational technology that blockchain is, what it's going to do for our lives, and drumroll please, she loves it. She's excited. She's supportive. She's even proposed issuing an entirely separate class of securities to address this issue. And I thought, wow, I don't know how it's going to come down, but I know it's going to come down well, because you've got somebody who gets it and who is willing to work toward it. I think it's going to be great.
Mm-hmm. And it was interesting too. We've heard so much from, Mr. Clayton of like all ICOs are securities, and then Hester was, a little bit on the other side, saying they're not all securities here. If they have a utility, then there's something else. Like they're not part of that Howey test. So I think it is going to be an interesting year. I thought that her statements would get more press, because remember when the Hinman speech came out, it was like such a huge deal that he was saying Ethereum wasn't a security. And then we have Hester say that, not all these things are securities, and it was like no one cared anymore. But I think that's just the nature of the market nowadays. Mm-hmm. People are like, oh, well, there's just not as much demand because prices have fallen. It's very price sensitive to, to people's excitement over everything, I think.
Yeah, and there's a lot of really big juggernauts in the blockchain space that are really kind of rolling out solid beta versions of their blockchains. I mean, take IBM Hyperledger Fabric. IBM got together with Maersk, and a few months ago they launched TradeLens, which is, this solution for the global supply chain. And I think that as we see the bigger entities that have the resources to really dedicate towards building out these larger infrastructures that are based on blockchain, and then we're going to kind of see the effect of it coming down. Like, for example, I sent our beloved friends over at Blockspaces an email the other day asking for help because I'm trying to build out a master slide deck on blockchain. Because, like you, I do a lot of speaking on it, and I'm really getting into the nitty gritty about exactly what happens when Alice wants to send Bob 1 Bitcoin, right? And so how the asymmetric key cryptography works for the signature of the transaction, how the transaction gets dropped into a memory pool, it gets picked up by the miners, like together with a block. And then weird things start happening and the order of events gets foggy. Like, is it assigned a unique transaction ID? At that point, is that unique transaction ID some form of hash cryptography, or is it some other form of cryptography? At what point do we hash? Do they hash the individual transaction and then they hash the block such that there are 2 points of hashing, or is there only 1 point of hashing? And so when we have folks that are lawyers like me and art engineers, and we're trying to really pinpoint exactly how this works, and we can't get answers, I think it's a real detriment to the market moving forward. Now, there are answers. There are people that know, like Gabe at Blockspaces. Gabe knows, right? But I asked like a half a dozen people who are actual blockchain developers before I was like, I'm going to ask Gabe, right? Because, you're just kind of like asking everybody. And they didn't know. And so I think that we don't really understand. The public doesn't really have general access to the individual specificities of getting into the weeds to understanding exactly how this works, and it's a detriment to the market moving forward and to prospective investors planning to take that leap.
Mm-hmm. Yeah. Sometimes I think of it like electricity. Like, I don't know how the electricity moves to the light bulb, but when I turn it on, it's there. That's my understanding.
Electrons! We love electrons!
Yeah.
Yeah. And so I really, I don't believe, I know, there's no question about it. Yes, blockchain is it. It's the internet of tomorrow. This is what's going to happen. It's just going to take time for everyone to get there.
Mm-hmm. Well, if the investors, if they're not super excited about blockchain right now, is there something else that they are excited on? Or do you ever recommend to companies, if they're only using the blockchain for a minimal part of their business, and maybe if it is purely a marketing play, has the attitude shifted? I'm finding I'm recommending people to use less and less blockchain in whatever they're doing, and just do straight equity and not complicate their whole business model with an unnecessary step if it's not integral to whatever it is they're doing.
Yeah, I never recommend anybody expending vast amounts of resources on incorporating some technology that doesn't have a place in their business. Mm-hmm. But where it does have a place, for example, I have another client that is a mortgage note trading company, and they are going out with a Reg A Plus offering. And I was like, oh my gosh, you have like blockchain written all over you. You're like the perfect use case for all things blockchain. And in multiple areas of your business, you're like the blockchain brainchild. You're my dream blockchain client. But they don't have to be blockchain now, right? And that's important to remember. And they're successful, they're revenue positive, they've got some growth issues. And, I met them maybe like close to a year ago, and they were already well into the development of the Reg A Plus and stuff like that. But we've continued talking. And so now what has transpired is blockchain is like post-Reg S or Reg A, right? When they've got all of their operations and everything's running smoothly and they're consistently generating revenue, then it's okay, now we're going to phase in blockchain because it literally makes sense for what their business model is, and they'll only be a much stronger company for it.
Mm-hmm. Mm-hmm. And do you think, okay, so this might be, I think you might have already answered it, but when looking at ICOs and like the way that companies can raise money, if they have a blockchain technology, in other countries, they've specifically, embraced ICOs, and America has been pretty hard on ICOs. Do you think that this is a good thing done by America, or are they missing the boat on the technology?
So okay, I'm just going to try and rephrase the question to see if I've got it right. What is my opinion on the regulatory framework at work here today for ICOs? Yeah, okay, I think it's BS. I do. I really do. I am so mad at the IRS for classifying as an asset. And then I get other people out there and they're like, but it is an asset. It is an asset. And I'm like, I understand that if we want to get really technical with the semantics, then it's an asset. However, it's not in the best interest of the people, and the people are supposed to be running the government and not the other way around. That is the point of a republic democracy. And I don't want it to be classified as an asset because I want to have this option in my life. And I want other people to have this option. I want them to have the choice. And by the IRS classifying digital currencies as an asset, we have completely obliterated the entire point of having issued digital currencies to begin with. And that is to make available a payment mechanism for microtransactions, for distance transactions, to kind of, whittle out some of the middlemen that are taking too big of a piece of the pie, and allowing other people, the lower financial classes, to get into the game, to get into the marketplace. And so here we're all yelling at the SEC, and we're mad at the CFTC, and all of these other administrative agencies, and whether or not they require a money transmitter license and all that good stuff. But what I really want the public to zero in on is the incredible damage that the IRS has done for the fundamental libertarian purpose of having issued a digital currency to begin with. So now I'm not going to use digital currencies to buy my Starbucks coffee or to support sort of the growth of this particular payment rail or this payment mechanism, because the IRS, the cost of the accounting that is required to treat it as an asset, the cost alone defeats what I would have saved by utilizing this. So now it is not economically beneficial. It's the opposite. It's not even economically neutral. It is economically detrimental to me as an individual to utilize digital currencies as a regular payment mechanism in my life. This is why I'm angry, and this is what I wish people would really focus on.
Yeah, like calling it property, it certainly, puts it in a different classification than if we were just to use cash on, or like with cash, clearly you don't have to account for what it was worth when you got your dollar versus when you spent it. And I think Coin Center put together a beautiful token, what was it called? The Crypto Tax Fairness Act in 2016 or 17. It said that they'd treat de minimis transactions under $600 as a foreign currency, so you wouldn't be required to calculate any taxes when it's under that amount. And then when it would go over the $600 amount, they'd treat it like a stock, or like the way it is right now. So it would free up for smaller transactions. And I thought that made so much sense. And unfortunately, it didn't get very far.
No, it didn't. It didn't. And I think that the American public, when we start screaming loud and long enough, and the corporations, America really, since we've allowed corporations to have political involvement, that people have lost control over their own governance.
Mm-hmm.
So
but I wonder, like, so now JP Morgan has their coin. I haven't studied it that carefully of how that coin is going to be used, but
they're just using it for conversions so that your transaction can complete sooner. Reconcile. That's what I was looking for.
Okay, so there's not going to be any tax implication for them, because I was thinking maybe they could lobby that, hey, this is a stupid way to tax it.
I know. We need, Americans need to vote with their dollars to utilize the services and products of companies that really are supportive of this particular technology, because it's going to be the companies that will successfully lobby the IRS, because that's really where I think the major barrier to entry is. When it comes to the SEC regulating as a security, I was always of the opinion that the overwhelming majority of ICOs were securities. I was of the opinion that these people were working a fraud upon prospective investors. And I was thankful for the cautious approach of the SEC, how they came in and they were like, hold up, everybody, right? Just a minute. And I appreciated their approach, and I appreciated their approach today. It's the IRS that I could do without. They're the ones that have gotten a bug up my tush, and I'm pretty ticked.
Yeah, I agree. Of all the regulations, that one's probably the hardest.
It's the most frustrating because of the
FinCEN ones are pretty bad too.
Well, it's in my opinion, it was the combination of the U.S. regulations and more specifically the IRS, which was largely responsible for the collapse of the marketplace. And it's because I had a client call me up like at 11:30 at night, screaming, literally, not at me, to me. Fury, rage was just boiling through his blood because, he's one of those tech geniuses, and he sounds a lot like Vitalik when he opens his mouth and starts talking and words start coming out. and he had set up a program that he had built to monitor what was going on, various exchanges and the prices of digital currencies around the world, so that the program would execute itself while he was sleeping, working, etc. And it would conduct these micro trades, so that he was taking advantage of de minimis or nominal changes in valuations, but in the aggregate, he was accumulating an impressive sum. And people ought to be encouraged to do this.
Yeah.
Because again, we are restricting market access to, the rich get richer.
Yeah, that's probably going to be a nightmare for taxes when he has to go. Well, hopefully he can just plug in an API with like cointracking.info or something like that. But there's such a thing too where the taxes from the time when the coins were worth a lot more are way higher than now what they're worth to like pay the taxes with. So.
Well, this activity took place prior to the IRS regulations, and so I don't think that he had to report anything for that, but he also had to shut down his software program. And any time where we are stifling creativity and market competition to serve who? Who are we serving? Yeah. That's right. We're serving the elite, the corporate elite, the handful of folks that are running our government, because it's not being run for the benefit of the people. And so this is why I'm generally more laser focused in on what the IRS is doing.
And they're laser focused on what we're doing too. I remember like that graphic where they were the ones spending the most money on all the chain analysis, reviews and everything. So yeah, I think we're definitely going to see some action in that arena soon.
Yeah.
I just got, I hired Peter Temko to help me with my taxes.
I love Peter. Yeah. Oh my gosh. I was on the phone with Peter yesterday because I had to do an entity classification for one of my clients. And you've got to send a cover letter to the IRS to do it. They're an S and they want to raise some capital. And so I have to work to see. So I'm filing the 8832 and I'm calling up Peter and I'm like, Peter, I know I've got to file a cover letter. And, Peter said something really interesting. He says, you have to include the shareholders' consent to the reclassification, because people have been calling up the IRS and filing complaints and things like that and saying that the corporation falsely changed, reclassified its tax election without their proper consent. And so, but this is the kind of information that is like nowhere in the Internal Revenue Code. Not that anybody in their right mind would want to wade through that anyway, but I love Peter. He's amazing. He's all that 10 bags of chips. I'm so glad that you're working with him.
Yeah. And Anessa, like, where can people find you if they want help, getting their business from the, beginning to exit phases?
Yeah, absolutely. So anybody's welcome to look me up on my website, which is intellilaw.io. That's INTELLILAW.io. Or look me up on LinkedIn, Anessa Santos.
Excellent. And that's a beautiful website. I was browsing through it myself earlier. It's really come together nicely.
Thank you. Shout out to iAnalyst. I know there's a resources tab that's hidden right now because I'm too busy to like upload my resources. Thanks.
Busy's good. Yeah. Well, thank you for your time. This was a great conversation. I appreciate it.
We'll have to do it again soon.
Yes. Thank you, and have a great day.
Thanks, you too. Bye-bye now.
Bye.
Bye-bye.